Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for Wednesday, August 21st, 2024. So here's what we have coming into the day on the daily chart. The market's in a trading range. We've had a couple of legs up, a couple of legs down, and then this really strong rally by the bulls. But we're finally back to the top of the range. You can see we're pausing after breaking above this swing point, which I have drawn with the red horizontal line. So we have a pause bar. What are the odds that this low one signal reverses this bull trend? It's really low probability. The odds are the first reversal down will be minor. There's probably buyers below for at least a small second leg after the rally. So with this doji, the pause bar, it's good for the bears. They finally have a bear close, and the market is now at least in a 1-bar trading range. So the odds are there are sellers above yesterday's high, but also buyers below the low, with a bullish bias because of the price action leading up to yesterday. But overall, we might be high in a trading range, so probably resistance not far above. And with that said, coming into the day, we have a small gap up to bar 1 and a bear bar. You can see bar 1 is testing the high of bar 59. There was an attempt to break out to the upside and an immediate failure. The bulls are hoping it's a breakout pullback buy setup. The bears are hoping it's a double top. The bulls had a buy the close rally with bad follow through, endless pullback. So the bears are hoping that the bulls who bought back on 59 are disappointed. They'll look to buy back. They'll look to sell out of their longs on the retest, and the bears will sell on the retest, betting on a double top. And bar 1's a reasonable stop order sell signal bar, and the context is decent. The only problem at this point is you're just about in the middle of yesterday's range, which was a trading range day. So here's the midpoint of yesterday. Market's not far above it, and we could easily test to the bottom or test to the top. So not ideal for buying or selling. It's really confusing in the middle of a trading range. And it's also the first bar of the day, usually best to wait for more information. But in general, we're expecting a trading range open 80% of the time. Bar 2, bull trend bar. So we went down on 1, up on 2, lots of overlap. For the bulls, it's a breakout bar. It did break out above bar 1 and the bars to the left. But look at the overlap with bar 1. Pretty much the entire bar is overlapping bar 1, and the odds are there were sellers above bar 1. So not ideal for the bulls. The bulls need more follow through. And then look at bar 3. So the overlap on bar 3 with bar 2. So the first 3 bars heavily overlap each other. So the bulls are hoping we have a micro channel since 78, the gap up, the micro channel continues. This is a strong enough breakout that the first reversal down should fail. Buyers below 3. And we should get at least a small second leg up. The bears see this as a weak breakout attempt, and they will scale into shorts above bars, even above bar 3, even though it's a reversal bar. There's a lot of overlap. There's resistance to the left. And the bears, if they are selling here, they know we could test yesterday's high. So they're probably either, if we start finding momentum to the upside, the bears will exit their shorts, wait to sell higher, or they'll scale into shorts higher using a wide stop. 4, reversal bar, so good for the bears, but relatively small bar. It's a good signal bar, but it is a micro channel for maybe almost 10 bars. And the odds are there's buyers below the first reversal. But for the bulls, not an ideal signal bar to buy below. They might buy at a distance below 4, maybe below 3, or even below bar 1. 5, we did have buyers below 4. It's a disappointing entry bar for the bears. Now we have a high 1 for the bulls, but it's mostly sideways. Does not look like a strong bull breakout above this swing point. So for the bulls, traders might view this as the top of a bull channel. And it's a broad bull channel, and the odds are there's resistance at this line, and the market is displaying that resistance, having a hard time getting above the bull channel line. So probably sellers above bar 5. High 1, but bad context. Lots of overlap, top of a bull channel. 6, breaking out to the upside, good for the bulls, but we still need follow through. It's the first bar breaking out above all the bars to the left, but it is a decent bar. There's not a ton of overlap with the prior bar and bar 6. And it's a decent breakout bar closing near its high. The problem, and it might be 2 legs up, 1, 2, or big 3 pushes, 1, 2, 3. But we're approaching yesterday's high. And at this point, it looks like we're going to yesterday's high before yesterday's low, if we do get to yesterday's low at all. And most bars are breakout bars. So if you look at the daily chart, most bars are breaking out of the prior bar, even if the breakout fails. In other words, most bars are not inside bars. So there's a high probability that today at least tests the high or low of yesterday. And of course, we have momentum to the upside, and we're much closer to yesterday's high than yesterday's low. 7, bull breakout bar, but very deep pullback. 7 got really close to yesterday's high. And 7, even though it has a weak close, is actually decent for the bulls. If you think about a bear who sold above bar 5, bar 6 was their entry bar, and then the market went another maybe 6 points against them. And that's really disappointing. 7, relatively big bar, low 2, low 1 below 5 or 4, and then low 2 below 7. But the signal bar is weak, and it's big, and the channel up is tight. There's probably buyers below 7. Bar 8 triggered the sell below 7, and then we have a high 1 signal bar with a bad signal bar. Bear body, even though it's a buy reversal bar. We're at the top of a trading range. The odds are there's sellers above bar 8, scaling in higher. We may have to test yesterday's high before there's any correction to the downside. And then we went outside down on bar 9. Bar 9 reversed all of the bars to the left. Good for the bears, but context still not great because of the overlap. How much of bar 9 is actually breaking out below the opening range? Just a fraction of the bar, and it didn't close below. And if you consider the entire range of yesterday, it's a trading range, and traders are buying low and selling high. So bar 9 could be a vacuum test of support. The odds are there's buyers below bar 1. We had a gap coming into the day, and the market is testing the gap where there's probably support. If a bear was short coming into the day, they were trapped by this tight bull channel, and if they can get a chance to exit, that's what makes the gap support. So we came close to testing the bar 81 high. We did test the bar 77 high. So that's a breakout point with the gap up, and then a channel, so a spike and channel. And then we came back and tested the breakout point, but we're expecting support. Trap traders below. This should get a second leg up. The tight channel is a breakout on a higher time frame. Bar 10, we sold off a little bit lower. We tested the bar 80 high, bad signal bar. That worked. You can see that's what we did. So I talked about that the other day. I had a review with a signal bar discussion on bad signal bars. Bar 80, not a very strong buy signal bar, even though it's a buy reversal bar. It's not a bull reversal bar. It's a doji, might even have a bear body. So the close is at the open, so it's a doji. So it's a trading range bar. And we know that usually there are traders selling above trading ranges and buying below trading ranges. So that makes bar 80 a bad stop order buy signal bar and a bad stop order sell signal bar. In this case, if you bought above bar 80, you would have made money. The market should not have done that, which makes the high of bar 80 support. Bears who sold above 80 got trapped, and they want to exit their shorts at their original entry. They may have scaled in because if you look to the left, a lot of resistance to the left. This was a strong breakout, maybe a double top with yesterday's high. Bears can sell, scale in higher, and they have a high probability of making money. Bulls did not buy above 80 because it's a weak signal bar, tight trading range, and then it got follow through. So the bulls, they see that tight channel. It's a breakout on a higher time frame, likely to get a second leg up. So the bulls also want to buy down in this area as well, and that leads to bulls and bears looking to buy at that support level. That leads to an imbalance. You can see the market comes quickly down to that price and then reverses up quickly again. Bar 10 is, you can see it as a high 2 because it is a double bottom with 81. But the signal bar is huge and it's forcing you to buy on a stop in the upper third of a trading range, so not ideal. Probably sellers above. It's also a trading range open, big up, big down, so you're expecting disappointment after trend bars. When it's a trading range, big bars like bar 9 get bad follow through. Big bars like 10 get bad follow through. If it's bearish, they buy. If it's bullish, they sell. So bad follow through on 11, we went sideways. Probably not enough to reverse bar 10, and bar 10 was strong enough for a second leg up. There's probably buyers below. 11, it's a weak sell signal bar as well, but probably sellers above too, and the upside is probably limited. It's a trading range. Outside bar 12, and it's a doji outside bar in the middle of a trading range. The market is clearly sideways, big up, big down, a couple of dojis. The range is expanding. This is an expanding triangle on a smaller time frame. We actually might be getting an expanding triangle maybe from here. Higher highs, lower lows. Sellers above 12, buyers below. But buying below 12, you're buying in the middle of the tight trading range. 13 sold off below 12 and then reversed back up. We're getting a lot of overlap. Sideways price action. This might have been the second leg for the bulls after 10. We rallied, pulled back, and rallied a second time, and we're at an area of resistance. Every time the market is in this area, we sell off, or at least we fail to go up. So 13 is a bad stop order signal bar, probably sellers above. 14, good entry bar for the bulls. There's a couple of ways you can look at it. I have this expanding triangle line drawn. It's a bull channel line. It's breaking out above that channel line. It's also a breakout bar, breaking out above yesterday's high and closing above yesterday's high. Good for the bulls. However, we can look at it in a couple of different ways. What leg is bar 14? It's probably a late leg, no matter how you look at it. Maybe leg 1, leg 2, leg 3, maybe 1, 2, 3, or even right here, bar 10 is leg 1, pull back, leg 2. So it's either leg 2 or leg 3. And it's climactic, it's the biggest bar of the day. The overall context is a trading range. The market has been sideways. So the bulls are going to have to do more to convince traders that this is a strong breakout and we're going higher. More likely, probably a trap, maybe a second leg trap, depending on how you look at it. It's a breakout attempt of a bull channel line, which has a low probability of success. And remember the expectation coming into the day. Yesterday was a trading range day, and when we looked at the daily chart, the expectation is sellers above. So probably limited upside for the bulls here. 15 a follow-through bar, but prominent tail above, and 15 is significantly smaller than 16. If this is a strong breakout, why is the momentum getting weaker? Why is the bull body getting smaller, bigger tail on top, sellers into the close? It's a little suspicious. So the problem the bulls have at this point is the trader's equation. The market's attempting to break out of a trading range, which has about a 20% success rate, 80% failure rate. 80% of breakouts of trading ranges fail. So here's a breakout attempt. You buy the close of 15, stop down here. Here's 1-to-1. And is it 60% that we're going up here before back down here? I don't think so. And if it's not 60%, then you cannot take the trade. It's a 1-to-1 risk reward. You need at least 60%. That's bare minimum. I also have a trader's equation video on that. But the point is, the bulls need more momentum. They need the follow through to be strong, and it's only getting weaker on 15, and that's disappointing. You also combine that with the context. It's a late leg breaking out of a bull channel line. You can see 1, 2, 3, testing that channel line pretty well. And again, it could be an expanding triangle, maybe 2 or 3 pushes up, 2 pushes down. We may come back and test below bar 10 and then reverse back up. But 15 is a bad stop order sell signal bar. There might be more buyers below 15. But because the trader's equation is bad for the bulls, the upside is probably limited. The bulls may not want to buy until there's a deeper pullback. But this is strong enough for a second leg. The danger is that it's a late leg and it does not get a second leg. And then 16 is a huge bear breakout bar. It's a reversal. It's one of the worst bars the bulls could have seen. If you think about it, if you see the momentum on 14, 15, you buy the close of 15, 16 is your entry bar. As a bull, how are you feeling? That's major disappointment. And it's strong enough for a second leg down. And if we're probably going lower, the bulls might not even try to get out at break even. So if you bought the close of 15, you might be so disappointed. And you think, well, we actually might be going a measured move down. It's probably more likely we're going back here before up here. Back to where a lot of trading is taking place, maybe the middle of yesterday's range. So rather than get out at break even, bulls will get out on any bounce they can get, or even just get out right below 16. And then everybody gave up. Bar 17, huge bear breakout bar. So a really decent looking bear breakout. 16, strong bear trend bar closing on its low. 17, an even bigger bear trend bar closing on its low. That's great. That's a great pair of bars for the bears. But the problem is the context. No matter how strong a breakout looks, when you're in a trading range, it has a 20% chance of succeeding. So the same problem the bulls just had, the bears are experiencing right here. What are the odds if you sell the close of 17, we're going all the way down here before back up here? It's probably not 60%. 16, 17 will likely get a second leg, but that doesn't mean we're falling for a measured move. And look at the context. 3 pushes down, increased chance of a deeper pullback, but the odds still favor a second leg down for the bears. And the bulls might wait for that second leg before they start to buy again. 18 a bull bar, so probably profit taking by the bears. That's more likely than aggressive bulls buying, but some bulls will buy, seeing 3 pushes down, and then their support from yesterday might be low in a trading range. So a little bit of a dueling lines pattern, but is 18 strong enough to reverse 16, 17? Probably not. 18 is a minor reversal, probably sellers above. 19, we broke out below 18. which was a weak stop order sell signal bar. Bears, they'll take profits below the bar. Bulls can buy for a scalp, but again, it's a minor reversal. So it may get a second leg, but that second leg could be as small as one bar, like bar 19. 19, micro double bottom. We sold off on 17, rallied on 18, and then down on 19, up on 19, bull bar closing on its high. So the bulls see a micro double bottom, but still, is this strong enough to reverse this? Probably not. The bears need at least a small second leg, and the bulls need at least a second reversal. This is still too minor. 20 going a little bit higher, testing the moving average. You think about it, we went straight through the moving average. So all of the bars up to 15 were mostly, even 16, mostly above or completely above the moving average. So bulls will buy the moving average, scale in lower, betting they can at least break even if the trade goes badly. But if they're paying above the average price for the first 16 bars, some bulls will buy the moving average, and then they get trapped on 17. So what's going to happen at a retest of the moving average? Probably sellers in this area. 3 bars up for the bulls, but not a micro channel. We did have a lower low on 19. So it might be leg 1, 18, pullback, leg 2 up to 20. 21, breaking out above the moving average, but now we're testing. Let's see. Here's 50% of the bear breakout. That's about where 21 rallied to. So 21 is a little bit climactic. You compare it to the prior 3 bars. It's almost as big as 18. Almost as big as 19. So it's one of the bigger bars, and there's acceleration after bar 20. So we rallied, paused, rallied, 1, pullback, 2, pause, maybe 3. On some lower time frame, it's probably a late leg, testing resistance. We're expecting a second leg, sellers above, maybe at the 50% pullback. Doji 22, disappointing for the bulls. Probably not strong enough for the bears to want to sell below 22. This is strong enough for a second leg. But bears will start scaling into shorts. Maybe they'll sell 50%, scale in higher. 22 is a bad high 1, sellers above. 23, a technical high 1, we fell below the low of 22. If you buy above 23, that's a high 1 buy, but the context is bad. This is a minor reversal after a bigger bear breakout. This is still a minor breakout. We're within a trading range. But if you compare the strength of the bear breakout to the bull breakout, the bear breakout is stronger. Stronger bars, bigger breakout. This is more likely a minor reversal, a pullback, and then the bear is expected to get at least a retest of the close of bar 17. Sellers above the high 1. 24 triggered the high 1, but sellers above. Now we have 3 consecutive dojis. So for the bulls, maybe looked like a decent rally, but now you're getting bad follow through at resistance. And it's a second reversal below 24, low 1, 22, low 2, 24. So more bulls might give up below 24, more bears might start selling, but it's still not ideal. It's a trading range. Might be a final flag for the bulls on a lower time frame, bull trend, tight trading range, final flag, maybe one more bull breakout, and then a reversal. 25 bear breakout, closing below the prior 3 bars. There's a gap from the close of 25 to the breakout points, 24 low, 23 low, and the moving average. Good for the bears, but relatively small bar. But what's going for the bears is context. This should get a second leg, and this is becoming an endless pullback. If a bull was buying the momentum, 21, they bought the close, they're getting an endless pullback, and they may give up below a bear bar, closing near its low. 26, we have a bull bar, rallied above 25, but it was a bad high 2, high 1, 23, high 2, 24, or 25, but really bad signal bar, probably sellers above. And that might be the second leg for the bulls, leg 1, 2-legged pullback, leg 2, very minor, but it did test the close of 21. So if you're a bull, about the close of 21, which was 56, 35, 50. the market rallied one tick above your entry price. So if you bought, you tried to get out at break even, you actually were able to get out at break even. And you can see sellers into the close of 26, we tested that price, and then the bulls were no longer interested in buying, so we're selling off. Weak sell signal bar, it's a bull body, but it is a sell reversal bar closing below its midpoint, and the context is probably better for the bears than the bulls in this case because of the big breakout, minor reversal, endless pullback. 27, we triggered the bad signal bar and then had a weak entry bar, but 27 is a bad high 3, high 1, high 2, high 3 trading range. Endless pullback for the bulls, sellers above 27, outside down 28, good for the bears. And look at the outside bar. This outside bar is much different than the bar 12 outside bar. 12 looks like it broke out about the same distance above 11 and below 11, and it's a trading range bar. 28 only broke out a little above 27 and broke out a fair amount below 27, closed near its low, bear trend bar. So this is a stronger outside bar than 12, and some bears will actually sell below 28 for at least a scalp, looking for a retest of the 20 or of the 17 close. $29 bear trading range bar closing above its midpoint. Not ideal for the bears, but it is minimum follow through, and it's a bad stop order buy, so sellers above. 30 continuing lower, same thing, bad stop order, good limit order above, and then falling more on 31, but testing the bear channel line and a little exhaustive. Good bar, 28, but then a couple of dojis, maybe a breakout, a couple of legs down, and then another breakout, but on a smaller time frame. It's kind of a nested breakout of a channel for the bears, so it's more obvious, but on a smaller time frame, there is a spike in channel trend from 28 to 30, and then 31 is breaking out below the channel, the bear channel, which has a low probability of success, and it's testing the more major bear channel line. So for a couple of reasons, plus I said it's a little climactic, there's acceleration, and it might be an exhaustion gap. There's a gap from the close of 31 to the low of 30. Is this a measuring gap or an exhaustion gap? It might be a late leg, maybe 2 or 3 legs down, and a breakout of a channel here, breakout of a channel here. Bears probably looking to take profits in this area, and bulls, they thought this was strong enough for a second leg, but because it was a minor reversal in a trading range, they'd rather buy below the breakout than up here. So you'll have bulls buying at the new low of the day here, and the channel line, bears taking profits, bulls buying for that reason as well. Inside bull bar 32, disappointing for the bears. For the bulls, if they bought the low of 19, 31 was a bad entry bar, so they might use 32 to exit their longs. Maybe we get a brief second leg, but the downside is probably limited. The bulls probably need more to reverse it, though. It's a tight bear channel, but it is a trading range and a late leg, and lower probability events happen more frequently. So it would not be the craziest thing in the world if we had a quick reversal of this micro channel, because we might be low in a trading range and at support. 33, consecutive bull bars. 33 is a low 1 signal bar. At support, probably buyers below, strong enough for a second leg up. And then more buying, 34. Now 3 consecutive bull bars, 4 bar micro channel, reversing up from the channel line. Probably a combination of bears taking profits and bulls beginning to buy, but this is the first trendline break of this tight bear channel. So the expectation is a retest and then a second reversal that the bulls can go for a major trend reversal. 35 continuing higher, so now we have 4 consecutive bull bars, this one closing above the moving average. So if you're a bear, and let's say you don't sell below 27 because It's a weak stop order, sell signal bar, and then you get 28, good entry bar, and then the market just continues without you. And you had bulls buying below 27. They see a bull breakout, a high 3 on 27. They'll buy below it. It's a trading range bar. It's a high 3. This is a bull flag, bull breakout, pull back, expecting a second leg. And then we get the downside breakout. So bulls and bears trapped at the red line. So this should act as resistance. But the problem, you have to pay attention to the price action and the approach to that resistance. Do you really want to sell on a limit order after 4 consecutive good bull bars? They're not climactic, they're uniform in size, there's very little overlap, there's micro gaps. It's really not ideal. It might be a double bottom, a lower low. 3 pushes down, low in a trading range. This could be a leg 1 breakout that could, if it pulls back, could lead to a second leg, higher prices. So even though this should act as resistance, right now the bulls are plowing straight through everything. We paused on 36, but probably minor, buyers below for a second leg. 37 continuing higher, testing that resistance level, but closing 1 tick above it. If you sold on a limit order, you are disappointed with your entry bar. If bulls were bought here, scaled in lower, they exit at break even, but they see the momentum, they may buy again, betting that this should get a second leg. And the bears, they missed this sell-off, they're expecting a second leg if we test the breakout point, which we did, but that is too strong. This is a 6 or 7 bar micro channel. So if the bears sold here, this is their entry bar, they may just give up on the trade. Continuing higher on 38, small doji, but still micro channel continues, weak stop order signal bar, buyers below. 39, resistance becoming support. We tested the low of 27 on 39 and then reversed up, and the micro channel is continuing. So a decent breakout for the bulls. The problem is context. Just like this was a pretty decent breakout for the bears. Although it was only 2 bars, there's a lot of price control, but could just be a vacuum test of support, overall trading range. The same applies here, even though the bulls, this is actually a more credible breakout. The bulls are controlling price and time in an orderly fashion, as opposed to over here, just a vacuum up, vacuum down. So this is good for the bulls, but there is resistance to the left, so probably resistance at this line, where bulls got trapped earlier. So leg 1, deep pullback, maybe leg 2. 40 continuing higher. This is a breakout on this time frame, but these overlapping bars and tails indicate that it's a tight channel on a smaller time frame. This can continue for a lot longer than traders think is possible, but it's hard to buy when the market is in a trading range. You have a couple of legs down, maybe a couple of legs up. You're getting close to resistance, but this is strong enough for a second leg, buyers below. We finally got a pullback on 41. 40 was a bad low 1, buyers below. High 1 buy, 41, but now you're at resistance. 42 vacuuming up to resistance, the bar 21 high. You can see we came close to it and found sellers into the close. But 42 is a low 1 or low 2, low 1 below 40, low 2, 42. But when's the last time we had a bear bar? It's been about 10 or 11 bars. So not ideal for stop order bears. Selling below 42, probably buyers below. 43, traders instead. You can see there's a sense of urgency here. Let's bring it back. If you're a bull and you're trying to get long, maybe 3, 4 consecutive bull bars, you want to buy below the prior bar. No chance, no chance, no chance. At some point, you just have to buy in the buy zone of the prior bar, which is the 50% level or the bottom half of the bar. And you can see that's happening on 39. Happened on 41. We actually got the pullback. Happened on 42. Tested the midpoint of the bar. Same with 43. Testing the midpoint of 42. So there's a sense of urgency here. But we're testing resistance. So as strong as this breakout looks, we're still in a trading range. The context is bad. Big down, big up, big down, big up. Bear bar closing on its low, 44. Reasonable to exit longs below it, but the bears probably need a little more before they start selling, like a second reversal, a trendline break. 45 we went sideways, so bear breakout, minimum follow through, but not really a significant trendline break. The bears have to do more. They need some more selling pressure. There's very little selling pressure throughout that bull breakout. And this bull breakout is strong enough to get a second leg up. Also, let's think about magnets today. Magnets above. The market's always in long, and 15 was a bad stop order sell signal bar. So traders were trapped below 15. Bulls were buying, bears were not selling. So that makes this upper red line resistance. And this selling pressure is weak. The first bear trend bar, or the first bear bar in general, in about 10 bars. And it's getting bad follow through. The bulls see it as a bull flag, bull breakout, pullback. They'll buy pullbacks for second leg. More sideways 47. It's a sideways pullback. That's a sign of strength for the bulls. The bulls are collecting bars above the moving average. We're getting close to 10 bars above the moving average. That's a sign of strength. We broke straight through the moving average. That makes the moving average support. If we test it, there's probably buyers at the moving average below this bull flag. 48 inside bar lowers the probability for breakouts. The bears are hoping this is a tight trading range, final flag. And maybe we get one more brief breakout and then a reversal down. But the selling pressure, pretty much non-existent through here. This looks like a minor reversal. The bears really going more sideways than down. Probably buyers below 48. 49 bull breakout. Traders are wondering, was this enough to disappoint the bulls? Are there going to be sellers at the 43 close, or are we going to get above it for a second leg? This is not enough for the bears. Not enough bars for a major reversal. Hardly a trendline break. It's really just drifting sideways. More likely, bull flag. And we're in the middle of the range. There's room to the upside with a magnet above. We fell below 49. That was a weak stop order sell signal bar. The bears may be hoping for a double top with 44, low 1, low 2, but bull bar. And too much momentum, not enough selling pressure. So outside, almost outside up 50. Buy reversal bar. It is a bull reversal bar. There's a tiny bull body, but basically a doji. Not ideal for the bears to sell, even though it might be a tight trading range. There's an increased risk of the bull breakout because of what came before this tight trading range. 51, testing the moving average, but expecting support, and there were buyers into the close of the bar. Might be a second leg trap for the bears. Leg 1, pullback. Leg 2. It's also 2 legs down, 50, pullback, 51. And then everybody bought the close 51. So reversing up, 52, strong breakout bar. Not breaking out of the bars to the left over here, so the bulls still need follow through. But the bears don't have a credible sell. This is more likely a pullback and a minor reversal. So probably more likely we get up here before bears look to sell. Breakout and follow through for the bulls, probably going at least a little bit higher. Not ideal, but we are in a trading range, so you do expect breakouts to get bad follow through. But all through here, the bears really don't have a lot of selling pressure. Bad sell below 53, buyers below. 54 outside bar, but a trading range bar. Weak stop order sell below 54, higher high double top, but weak selling pressure. More than 10 bars above the moving average. And a really decent breakout for the bulls here, which should get a second leg. 55 bull breakout. It's an outside bar, so OO pattern, breakout mode. Expanding triangle on a lower time frame more clearly. But a much bigger bull breakout than bear breakout. So you can see 55 went a lot higher above 54 and a lot less below 54. So this is a bullish outside bar despite the weak close, and there should be a second leg up. It could be the second leg the bulls get, leg 1, pull back, leg 2. But 55 is a bad stop order signal bar for the bears. The bears still need more selling pressure. So buyers below 55 on 56, but 56 is now a bad high 1, weak signal bar, kind of getting higher in the range now. Not ideal for buying. Sideways 57, also not ideal. We're going more sideways for the past 5 bars. Limit order market, sellers above, buyers below. Another inside bar 58. The bulls see it as a bull flag and a trend continuation. Trend resumption setup, buyers above 58. The bears hoping it's an II final flag before a reversal. But when's the last time a bear made money? Let's say a stop order bear. When's the last time a stop order bear made money? Really not since over here. The bears have had nothing going for them all through here for the past, 20, 25 bars. So not ideal for selling. Also for II patterns, if you're going to sell, better if both bars are bear bars, but especially the second bar, your signal bar, better if you're selling below a bear bar. 59, another bull bar, breaking out slightly to the upside, but tight trading range. 3 bars with the same high, almost a ledge, and high in the overall trading range. 60, vacuum test of the 15 low. But now we might have a late leg. 1, 2, 3. The best looking bull bar in the entire rally, which might be a sign that it's exhaustion and an exhaustion gap, not a measuring gap. So we might have to pull back here. Bulls might use it to take profits. Follow through 61, but similar to 14, 15. Why is the follow through bar getting smaller with sellers into the close? That's a sign of weakness by the bulls. This still might be an exhaustion gap. And then everybody sold. 62, the bulls used this breakout to take profits. I feel like this might be a classic example of the trend looks weak. There's a lot of dojis, but it's in reality a small pullback trend through here. And none of the buy setups look good. And then as a beginner, this would always trap me. You finally get this decent pair of bull bars. Like Al would say, you get at least one big bull bar closing on its high and follow through. You buy the close, you go for a measured move. But just like over here, the problem is risk reward and the context. You're late into a rally, more than 20 bars into the rally. You're getting the strongest bull bar and one of the biggest bull bars, might be the biggest bull bar in the entire rally. Maybe not the biggest, but one of the biggest bars. And it's coming late. And we're getting 3 legs, 1, 2, 3, high in a trading range day. The odds are we'll get down to the 60 low before the measured move target. But that is where the weak bulls buy and the last of the weak bears sell. This is where strong bears are selling, scaling into shorts. But they might just take the scalp on 62, the first test of the moving average and a lot of bars. Most of the bars above the moving average, but strong enough bar for a second leg. And disappointing for the bulls. Bad stop order, signal bar, 61. That will be a magnet and resistance. 63, minimum follow through, but the bears unable to get bars closing below the moving average. So we could pull back. It's a big up, big down, bear breakout. We could easily get a deep pullback, but probably get a second leg. 64, going to a new swing point. Micro double bottom 62, 64, weak signal bar, sellers above. We're rallying on 65, but it could just be a breakout pullback. Where's 50% of the bear breakout? Right here. So it could just be a vacuum test of that, and it's a bad signal bar. The upside probably limited. 66 immediately failed. For the bulls, this looks like a minor reversal after the bear breakout, but the bars are still holding above the moving average, and that's a problem for the bears. 67 finally breaking below the trading range, or breaking below the moving average, but overall trading range for the past 5 or 6 bars might be 3 legs down. 62, 64, 67, and it's a bigger bar, 68, maybe a little climactic, second leg trap, testing, support. Remember this expanding triangle, bears. Some unfortunate bear sold the low tick of 56 during this expanding triangle. It's kind of like down here. Here's an expanding triangle. Instead of going to the lower time frame, we can just look at this pattern. So it's a late leg, 3 pushes down. Some bear sold the low tick of 31, and then they got trapped. And that's really similar to what happened over here. Expanding triangle, 3 pushes down. Some unfortunate bear sold the low tick of 56, and then they got trapped. So what are they going to do on a retest? If we got back down here, the low of bar 31 would act as support. Just like over here, the low of 56 should act as support. So we're getting there in a hurry on 68, but there might be support right there. 69, breaking through that support, but there's another layer of support right here. And we did not close below that one. However, the bears do have 3 consecutive bear bars with a micro gap. There's a space between the low of 67 and the high of 69. That's good for the bears, probably sellers above for a second leg down. 69 inside bar, but sellers into the close. Bears selling in the sell zone of 68, the midpoint and higher. And remember, this should have been support, and we went straight through it. So this will be resistance now. So we went a little above it, but sellers in this area. 70, coming a little further to the downside. 1, 2, maybe a third leg down. But this should get a little bit of a bigger second leg. But the downside could be limited. If you think about the rally, we're at around 50% right here during 70. So the downside is likely limited. 71 breaking out to the downside, but buyers into the close, 3 pushes down, 1, 2, 3. So might be a late leg. It's a parabolic wedge. It's a breakout on a higher time frame chart, but the expectation is a deep pullback before a second leg. 72 bull bar closing on its high, but bad signal bar 71. If we do rally, we'll probably come back and test the high of 71, and it will act as support. The bulls might set limit orders to buy at the 71 high on 73. And then you can see we pulled back on 73, tested that high and a little bit lower. Bulls buying in the buy zone of 72, 50% level and lower. But now 73 is an inside bar, and it's a bad stop order buy signal bar. And there's probably sellers above. 74 bull reversal bar. The bull's hoping it's a head and shoulders bottom, left shoulder, head, right shoulder, micro double bottom with 73, 74. But all these bars are completely below the moving average. That's a problem for the bulls. The bears, this is a breakout on a higher time frame. So the 50% pullback of that breakout is here, and we might find resistance right there. Outside bar 75, continuing more sideways. It's becoming confusing. Lots of sideways price action, limit order market, buyers below, sellers above. 76 breakout bar, but possibly a late leg, maybe leg 1, leg 2, coming close to the 50% level. The upside probably limited. 77 bull breakout, but look to the left. Even though it looks like a decent bull breakout, we're high in a trading range, and it could be a vacuum test of resistance. It could also be a leg 2 trap, 72, sideways pullback, and then up to 77. So if a bull bought down here, we're back to the top of the range quickly. They'll take profits. Bears looking for a double top. They know that this breakout should get a second leg down after a deep pullback, which we've gotten. 78 testing the high of yesterday, reversing back down. 78 is unlikely to reverse 76, 77. We probably need at least some sort of double top, and this should get a second leg up. And then 79 could be that second leg. 3 pushes up on a smaller time frame, 77, 78, 79, but bad signal bar, probably buyers below. Good entry bar for the bears, but not very big, and about half the bar is overlapping the prior bar, which is weak, and we're closing out the moving average. Would have been better if the bar closed well below the moving average, well below 79, but the reality is we're probably going more sideways. Might be a 50% pullback of the bull breakout. That's about where we're testing. There might be buyers on the close of bar 80 and then 81 more sideways. So for always in today, when the market's in a trading range, it's really difficult with always in, and you have to judge the selling pressure and buying pressure. But on the open, this looks like a bull leg in a trading range. A couple of bars up, but lots of overlap, climactic, top of a trading range. So in terms of always in, you might be in a late leg, and as far as context is concerned, it might be always in short at this point. But then you get a big breakout bar, and you're in a trading range, and that's a problem. Bar 9 is a problem for the bears. There's no time control. So 9 can be caused by strong bulls stepping aside, and the lack of their buying vacuums the test lower to where they're willing to buy. The bears can make a quick profit, and that's what traders do in trading ranges. They scalp. So now we're at a level testing the gap where bulls might be looking to buy, bears looking to take profits. So we could quickly become always in long at the close of bar 9, and then right back up on 10. Maybe always in long, but at the top of a range. This is why it's easier to, rather than think of always in, this is why I think of buy low, sell high, and scalp when the market's in the trading range. If we're high, I'm looking to sell. If we're low, I'm looking to buy. You see consecutive big bars, always in short, but the context is bad. It's a trading range, so it's the opposite in a trading range. Big bear bars, probably always in long. Big bull bars, probably always in short. And that's how it goes all day long. Big bear bars, probably always in long. Big bull bars, probably becoming always in short. Special case here, strong breakout, lots of bars, big distance, time control, price control. This should get a second leg. And it was 3 pushes down. This was a decent leg 1, whereas this could have been leg 3. This could have been leg 3, late legs. This up here for the bulls was a late leg and climactic. This is different. This is an always in short scenario. 3 pushes up, climactic, high in the trading range. That is where you get these bull bars that might flip it to always in short. But then you get a big bear bar, and it might be always in long very quickly again. But very confusing to think of it that way for me. So I just think buy low, sell high. For stop orders today, you could buy above bar 10. It's not ideal because it's a big bar, so big risk. And you're buying at the top of a trading range, but it is a double bottom and a good signal bar, possible swing of the day. And then you could sell below 16, opening reversal, 2 or 3 legs up, and a really strong signal bar, and that should get at least a second leg. Stop orders sell maybe below 25. It's a bear bar, closing on its low. It wouldn't trigger until 27, but you're betting this is a minor reversal, and the bears should get a second leg after this. And then over here, hard to buy above 32, 33, but once you get 34, 35, 3 or 4 consecutive bull bars, and you see it's a late leg, low in a trading range, traders can start to buy, and you can buy any of these bars, always in long, and bull bars closing above their midpoints. But then through here, once you get the OO pattern, stop orders really not ideal, limit order market. buyers below, sellers above. Maybe you sell the low one, 67. Not ideal. The bar is closing around its midpoint, and there's support at the moving average, but this should get a second leg down. And then for limit order trades today, sellers above 1, buyers below 4, probably sellers above 4, and then sellers above 8, but I don't think it triggered. Buyers below 1, buyers at the 81 high, buyers below 11.12, sellers above 13. The reason I don't think buyers below 15 is because it's a late leg and it's a climactic breakout, and it's trying to break out of yesterday's high. And then down here, buyers below 18, sellers above 23, bad high 1, bad high 2, 25, sellers above, bad high 3, 27, sellers above. Micro channel, can you sell above 31? You can, but it's a late leg, so not ideal. Plus, remember I mentioned breakout, spike and channel, and then another breakout. I'd actually like to look at that after I go through limit orders. Through here, you can buy the first pullback. There's limit order buys inside these bars. There's implied pullbacks. Traders are buying the buy zone of the prior bar. So 34 overlapped the midpoint of 33. Traders bought. Same with 36. Traders bought. 39 overlapped the midpoint of 38, and so on. Minor reversal, you could buy below any of these bars, betting the reversal will fail. This is a strong enough bull leg. It's a minor bull trend, but it should get a second leg, so the reversals should fail. And then buyers below 55, sellers above 55, sellers above 64, buyers below 69, sellers above 71, but late leg, not ideal. So if you do sell above 71, that's your entry bar. Disappointing. You can exit at break even. Traders did. And then we rallied for a second leg. So I do want to look at this. Let me just say the day type for today was a trading range day. And it's mostly horizontal, not clearly owned by the bears or the bulls, but we did open here. Here's the open of the day. Here's the close of the day. So the market did close above the open, but it's a small body relative to the range of the bar, and it almost closed around the midpoint. Also, if you look at the daily chart, this is the overnight session. If we look at the day only session, you'll see the bar is actually weaker. So here's the day on the daily chart using the day only session. So where do we go tomorrow? Tight bull channel, still a breakout. There's been no pullbacks. But we're getting high in a range, and we're testing resistance areas. Here's one. It's a bad sell signal bar. Traders got trapped. So I suspect sellers not far above today's high, and today was a trading range day, even though it looks like a trend on this chart. Once again, it's more of a trading range, so consecutive trading range days. We're starting to go more sideways, losing momentum. This is strong enough for a second leg, so buyers below, but the upside might be limited as we get higher in the range. Big down, big up. I'm expecting more sideways. And then just sort of one more thing as a bonus. If you're interested in this part of the chart, I should have went over it when I was here. So if we look at up to 1205 on the, 1 minute chart. Let me see if I can pull it up here too, so I can go back and forth. right here. So bear breakout, a couple of pauses, another bear breakout. Now we know it was a late leg. I'll do this really quick. So this is, let me highlight it. This is what I'm interested in showing. We know it's a late leg, 1, 2, 3. But it's the minor details I'm interested in here. Spike and channel, and then another spike. So what's happening, we're getting a low probability breakout on this bar, the 1205 bar, on the 5-minute chart for a couple of reasons. It's a bear breakout of a minor spike and channel, but it's also a bear breakout attempt of a more major channel line. So what that looks like on the 1-minute chart, if we go to 1205, right here, here's our spike, pullback, channel. So here's our spike and channel, bear trend. The expectation is 75% of the time bear channel, bull flag, you get a bull breakout, we come back and test the start of the channel, which is where stop order bulls got trapped, and this becomes resistance. In this case, we got a bear breakout. And I mentioned earlier, 1, 2, 3 pushes down. 1, 2, 3 pushes down, climactic. And you have to ask yourself at this point, is this bar 1203, is it a measuring gap, or is it an exhaustion gap? We know it's not a breakaway gap. It's not occurring at the start of the trend. We're already well into a bear trend, at least 20 bars. So is it exhaustion, or is it a measuring gap? Are we testing this red line, or are we going down for a measured move? There's a couple of ways you can draw it. We don't really know at this point, but we do know the higher time frame context, the 5-minute chart, there's a major 3 legs down. And we know because of what's happening here, this is unsustainable. We're getting climactic behavior far below the moving average. So bears will take profits and bulls will buy. Bad entry bar for the breakout, more likely an exhaustion gap, and we're going to close the gap. And we got there pretty quickly. So I just thought that was interesting, and thought I would share that. But that's about all I got. So as always, please feel free to leave questions in the comments and include timestamps for any questions specific to this video. Alright, hope everyone has a good night. Thanks for watching.